A sensitive question, but everyone can't help but think about, will NIO go bankrupt? First up, we will look at the Z-score bankruptcy warning model. Right now, NIO's Z-score is hanging out below the critical threshold of 1.8 with a worrying 1.2 reported in second quarter 2024. This raises some red flags about financial risks. Let's repeat it strictly. Next, despite ongoing losses, NIO has impressively secured multiple rounds of financing this year. This shows that investors do have faith in its tech, like those cutting-edge 5nm chips and innovative battery swapping patents. It's a strong indication that the market believes in NIO's brand value. Speaking of the brand value, NIO has a solid user base with over 570,000 vehicles on the road and an active community that ranks among the best in the industry. What's more, high net worth users show a repeat purchase rate of 52%. That's some serious loyalty. But let we get real. Why can this hardworking NIO churn out that blockbuster product the market craves? With a brand so full of buzz, why aren't they selling more cars? The crux of the issue is that while other automakers are competing by ramping up their product offerings, NIO is taking a different route by focusing on service. This strategy makes selling cars more challenging and drives up costs even further. Today, I'm not just giving you another update on NIO. I see a huge looming threat on the horizon. My friend, you definitely won't want to miss this. Hi, I'm Sheila Wang. I'm here to update it on the most cutting-edge and fresh business and investment information for you. So don't forget to smash that like button and subscribe my channel. I also welcome you to join the discussion in the comments section below. Now, let's dive into today's topic. We all know that even while losing money, NIO still enjoys a lot of love from fans, right? Mainly because people believe the company has unique advantages. We've long held that NIO's competitive edge lies here. The construction cost for NIO's second-generation battery swapping station is around $350,000, and to break even, they need to complete 60 battery swaps per day. Right now, only 20% of these stations can hit the target, meaning most are operating at a loss. In NIO's financial reports, the other sales segment, which includes battery swap solution, has been in the red for years. However, thanks to its self-developed technology and unique battery swap model, NIO has managed to maintain a struggling stock price and investors' confidence. But with the players like BYD and Xiaopeng adopting 800-volt fast charging technology and the emergence of more cost-effective solid-state batteries, charging is no longer a key factor in buying decisions. If the advantages of the battery swap model evaporate, then NIO's so-called moat disappears too, my friend. That's a real kicker, and I have to highlight it. Additionally, NIO's hefty investments in technology R&D and yield immediately returns, which is a major hurdle on their path to self-sustainability. Well, when it comes to brand management, NIO has stretched itself too thin with 3 brands, NIO, Envo, and Firefly. Sure, the intention is good, aiming to reach everyday consumers, but with the limited resources, especially via bleeding cash, spreading themselves too thin just highlights their resource scarcity. Some might argue that Xiaopeng has successfully launched its second brand, Mona, but that brand extends Xiaopeng's smart driving advantages to cars costing around 150,000 yuan. What about NIO's Envo and Firefly? They don't offer the high-end services that NIO is known for that lack significant tech advantage, making them less attractive. Just a look at Envo's sales. It launched in May last year and only delivered nearly 20,000 units by December. Meanwhile, Xiaopeng's Mona M03, released in August, delivered over 60,000 units by the end of 2024. 3 times on those numbers. Amazing, right? And it's launched 3 months later. Nio's all-in strategy on self-developed technology. 12 core technologies developed in-house has its pros and cons. In 2024, Nio showcased these 12 technologies, covering everything from vehicle engineering to smart driving. They're all in on code tech, unlike Li Auto, which gets criticized for under-investing in R&D. Is all in on self-research a good thing? So when compared with these 2 brands, let's rethink about this. Is all in on self-research is a good thing? But with 11,000 R&D staff tackling 12 complex core technologies, it's tough to excel in any single area. Take Huawei, for example. Their strength in smart vehicles comes from concentrating over 7,000 R&D personnel on breakthroughs in smart driving, cabin technology, and vehicle cloud integration. The lessons here? Okay, focusing resources to master one thing is crucial. For Nio, the priority now should be to shrink their focus and genuinely serve the mid to high-end market. After all, the high-end i2 M7 with an average price of over 50,000 yuan sold nearly 160,000 units last year. There's still plenty of potential in that demographic. Let's hope Nio can turn around its long-standing losses, because only when a company has positive cash flow can it sustainably serve its customers, right? Well, what I'm worrying about too is bigger challenges ahead. Li Bin and Nio's management has a hefty crisis on their hands, especially with the capital market undergoing significant changes. AI is stealing the spotlight from the new energy vehicles. And as AI gains traction, the gap between traditional automakers and new entrants in the smart vehicle space is rapidly closing. In contrast, Xiaopeng, which added AI to its name, has regained favor in the capital and custom markets thanks to its AI features. Low-altitude economy and Mona brand. Just a few months ago, Xiaopeng stock hit a low of $6.6 in the US. Since then, it's been on rise. Well, when you look at Nio stock, it's clear who's on steadier ground. So it's time for Nio to have a reform. Nio is stirring up a storm of change, starting from within. Li Bin insists every penny spent must make a sound. 2025 marks Nio's 11th year, and we hope they can break free from the operational quagmire and win in overtime. As the capital frenzy fades and market competition returns to product fundamentals, companies lacking a core technology mode and blindly expanding will struggle to survive. Whether it's Li Bin's ambitious doubling targets or the market's pessimistic outlook, 2025 could very well be a make or break year for Nio. Lastly, I hope every investor of Nio should have a very clear mind at this time. Hope everything goes well with Nio. So this is all for today. See you next time, my friend.